Hey guys, what's up? So this is Tim here, and I'm going to bring you on the journey. So what journey is this? This journey is the basics about Forex. So I'm going to be telling you mostly what is Forex, what things you can look out for when you're taking your trades and things and stuff like that. So let's get started. So for the first part of this particular video, I'll be explaining the basics. So the basics is the currency pairs. I'll be talking about the currency pairs, and also I'll be talking about metals such as gold and silver. So when we look at currency pairs, there are a lot of pairs such as Euro USD, GBP JPY, USD JPY, GBP USD, and so on. Okay, what does this mean? Okay, before I move on to the next slide, I'll just explain a little bit of terminology or concepts that is being used in the trading scene. So for the first one is the bull. So basically we have the bull market, we have the bear market, or either a bullish movement or either a bearish movement. Okay, so for this example, I'm going to take one of the metals, which is mostly traded by all of the traders, or I would say 90 to 80% of the traders in the retail trading market. Okay, so I'm going to go to the next one. Okay, I'm going to explain what it means by a bearish movement, a bullish movement, or a bear market or bull market. All right, let's go to the next slide. All right. Okay, cool. So this one, as you can see here, this one is XAU USD. Okay, what does it mean by XAU USD? Basically, it just means that gold versus the dollar. Okay, so XAU is basically the code form for the particular metal, which is gold, and then USD, of course, is the US dollar. So if you look to the left-hand side, you can see that there is a bull here. So when the chart, or I would say the candlestick chart is going up, is meaning it is in a bull market. All right, so if you can see here, from the bottom it keeps going up and up and up and up. It is a bull market. Okay, versus a bear market. So for this one, as you can see here, the chart is keep going down and down and down and down, but you can see that there is a bear here. Mr. Black or brown bear, I don't know with the contrast, but yeah, you can see there's a teddy bear here. Okay, so when the bear market, that means the chart is going down. Okay, to give you guys a simple idea, or I would say something easy for you to remember, look at the horns on the bull. If a bull charges at you, he will lift his head up, thus giving you a push to the upside. Okay, so that's why it's a bull market. If a bear, how he's going to attack you, he's going to use his claw or his paw to actually strike you down. So that means he's going to do a movement from the upside to the downside, thus tearing you apart and ripping you to shreds. So that is the bear market. Okay, so now moving forward, okay, I'm going to talk about the next one. Okay, so just to give you guys a concept. So let's say, for example, if you are looking at currencies, whether it be Euro USD, GBP USD, AUD USD, or even USD CAD. Okay, so I'll give you an example. So if you see here the three letters at the back, as long as there is three letters, and let's say, for example, it's USD. Okay, like in this case, this one is XAU USD. Okay, we also have, like I mentioned just now, USD and so on. So just imagine that the USD part is the magnet. Okay, so let's say, for example, if the magnet is not strong, what will happen? The chart will go up, or I would say the item. Just imagine if you have a negative uh, setting of a magnet. So that means this particular magnet repels, or the magnet is not too strong. The item or either the chart will actually go up. Okay, so this is the meaning of this symbol right here. If the magnet pull is not so strong, but what happens if it is in the opposite end? Means the magnet is strong. So you can see here, if the magnet is strong, USD is strong, the chart is going down. So it's vice versa. So if you're going to look at news, you check out news. Okay, let's say, for example, the Federal Reserve has increased their interest rates, which means it's good for the dollar. So if it's good for the dollar, means that gold, XAU USD, the chart, what you see on the chart will go down. People are buying dollars and selling on gold. That is the most basic concept that I can share with you today. All right. So what we're going to talk about next. Okay. So this is the candlestick chart. So you can go to this website, tradingview.com. Later, I will go to that website to actually talk more or either share more on the things and stuff you can do on that particular website. Okay. So just before I move on, okay, I just want you to be clear that what you see on your screen right now, the candlestick chart, basically means, let's say for example, if you see this movement going to the upside here, it's bullish going down, it's bearish going up, it's bullish, and vice versa. So later I will cover more in detail on what this candlestick represents, what is the body for, what is the wick form, and so on. Okay, so I'm going to continue to the next one. Okay, so in a candlestick chart, there are a lot of candlestick patterns. Okay, so if I go back to the previous slide, just give me a sec. Yep. This is about magnets. Okay, so this one is about the candlestick chart. So you can see there's a movement going to the downside, going to the upside. Okay, what does this mean? There are a lot of patterns actually involved in this particular chart. So normally this type of chart patterns can give you a hint on where price is going, whether you want to take a sell position or either you want to take a buy position. So I'll give you an example. Like here, you can see there's a left shoulder. This is the head, and price has broken above the neckline of the left shoulder and coming back to the head. So this is what we call a head and shoulders, I would say an inverted head and shoulders pattern. Okay, so it's not too clear on this particular screen here, but I will show you on the cheat sheet. Okay, so now we go to the cheat sheet. Okay, as you can see here, this is what I mean. Okay, so we have the left head, we have the left shoulder, we have the head, and we have the right shoulder, which is going to the upside. If opposite, we have the left shoulder, the head, and the right shoulder going to the downside. So we also have the double top, the double bottom. You don't need to remember all of these patterns. The one that most important, that most commonly occur on the chart, which you can see on any time frame, on any day, on any I would say pairing, whether it's the euro yen, euro dollar, the gold versus the dollar, you can see the double top, head and shoulders, double bottom, inverted head and shoulders. You can see all of this. Okay, I'll go to the next slide. Okay, so this is also one of a candlestick pattern. Basically, this type of candlestick pattern will be taking for buy positions. So if you see here, candlestick pattern, chart pattern. Okay, so you can see here, morning star pattern. Okay, what does this mean by morning star pattern? We have one red color candle, which is a bearish candle, followed by a doji candle. So I've listed here what does it mean by a doji candle. Basically, a doji candle is an equilibrium candle where we have long shadows on the top and bottom, where the candle closes in the middle, and it will look something like this. So that normally means a doji candle. In another sense, a doji candle is also a sign of reversal. It's not a really solid confirmation, but it's just a sign of reversal. Okay, so if you see this candlestick pattern, we have a bearish candle, we have a doji, then we have a bullish candle. So as long as the bullish candle is bigger, or I would say looks really strong in this pattern, we can go for the upside. We can take our long positions, our buy positions. So this can be either for the gold versus the dollar, the euro versus dollar, or whatsoever. Okay, so I'll just read it out to you. We have a three candle pattern. The first candle, which is red, bearish, and we have the second candle, which can be any color. Okay, which is this one, is the doji candle. Then third, lastly, we have the green color candle, which is the bullish one. So this is a move which you can take for the upside. If we are looking at vice versa on the bottom, we will see a what we call the evening star. So I will share with you how that looks like. Okay, so the evening star looks something like this. Basically, it is the same thing as the morning star, but it's just inverted. It's the other way around. Okay, so we have a bullish candle, we have a doji. So remember, just now I mentioned about doji. It is a sign of reversal. Once there's a doji, and as long as the new bearish candle it closes way below the doji candle, especially the body, it is a sign of reversal. You can take your short or either your sell positions right here. Okay. Okay, so this one is the candlestick pattern. Next, we come to the most basic and the most important of any candlestick chart. Okay, so this one is what we call the support and resistance. Okay, as you can see here, I already have marked out the resistance and marked down the support. Okay, if the resistance, it will be at 1857 and the support will be at 1807. Okay, so what do I mean by support and resistance and how we can use this in our daily trading activities? Okay, number one, what is the meaning of resistance? Let me cover resistance first. So let's just say, for example, price reaches resistance, which the line I have drawn here, and when you see price reversing and coming back down with a strong movement, okay, that is an area which we can call resistance, which means that price has reached that area, but it cannot go beyond that area. It cannot go beyond that area for that particular time period. That is where we call it resistance. Vice versa, also for support. Let's say, for example, the price has gone to that area, but cannot go lower than that particular price, cannot go lower than that particular price. That is what we call a support. So I will give you a imagination concept. Let's say, for example, you are in a room right now. Okay, you're in a lift or maybe a square, a very small room. Just imagine, okay, you are standing on the floor. Now you have jumped up in the air. Okay, so if you jumped up in the air, maybe you have gone midway, you are coming back down to the floor. Okay, but then now the second jump, you jump and you manage to touch the ceiling. Okay, so you manage to touch the ceiling, then you manage to come down to the floor. Then you jump again for the third time. You manage to not only touch the ceiling, but you manage to hold the ceiling. So that means you became Spider-Man. Your fingers, your entire hand can actually touch the ceiling and you can just dangle off the ceiling, which I find that very interesting if it were real. So it's just imagination. Okay. So what if now you let go of the ceiling and you fall back down to the support, which is your floor. Okay. Now your floor breaks. You've gone below one more level. So just imagine you're on the fifth level. Now you're on level 4. Okay. Once you have broken through the fifth level's floor, you are standing now on level 4's floor. Okay, and once you look to the top, you can see that the hole in the floor magically, just like out of nowhere, magically the ceiling is now covered. So you might be thinking, how is that possible? Well, that is the same concept in trading. So just imagine the chart. It's now at 1807. So if it's at 1807, you are at 1807, you're jumping up to the ceiling. You have touched the ceiling at 1857. But then again, you could not have enough power to break through that ceiling. You came down again, back to 1807. But let's say, for example, you broke through 1807 and now you are at 1800 and your new ceiling is 1807. So that's the concept. It's just rinse and repeat. We have a support, then we have a resistance, then we have a support become resistance as well. Okay, so I will show you and demonstrate on the chart how this support and resistance actually looks like. Okay, so let me go to the chart. Okay, so this is the chart right here, and as you can see, okay, as you can see, and we're back. Okay, so this is the chart. This is the XAU USD, which is gold. And for this particular chart, I'm just taking this particular area just for example. Even though we are on the 24th of September, it's a Sunday, 2023. But I'm just using the March 10th, 2023 just as an example. Okay, so what we can see here, this is your candlestick chart. Okay, so I'm just going to remove everything. Okay, just to give you a clean view, we can see that each of these candlestick has different color. Okay, so if I go and zoom in here, this one is black color. For me, I have set my chart for the black color to be the bear candle, and red blue to be the bullish candle. All right, because for me, I just wanted to set it this way. Of course, you can set it any way that you like. You just need to remember which is your bull candle, which is your bear candle. All right, cool. So as you can see here, the price is moving up and down, up and down, up and down. Okay, how you're going to find your support and resistance? I'm going to show you how to do that. Okay, so first things first, you need to remove this one, this one, this one. Just give me a sec here, guys. Just want to show you. Okay. Okay. So now in this particular zone right here, just imagine you can't see the future. This is the current chart. So to find your resistance, you can go to any time frame. You can go from the monthly, the weekly, the daily, even to the 4 hours or the 1 hour. For this example, I'm going on the 1 hour time frame, as you can see at the top here. Okay, this is the 1 hour time frame, which means each of these candles represent 1 hour. If I change it to 1 day, yep, it's gone. It's gone. No, it's not gone. I just need to go back to 2023. Let's see. Yeah, over here. It's not gone. I just went two back in the past. I don't know why I went there. Yeah, so you can see here that it's the same area, it's the same box, just that there is lesser candles here. There's not many candles here. The reason why is because if I just hover over it, and you can see at the bottom here, okay, you can see at the bottom, it says Friday, the 10th of March, 2023. This one will be the 9th of March, and so on. As you can see here, remember I was telling you about the morning star chart pattern? Yeah, there is one right here, as you can see. So this is what we have, the bearish candle, we have a doji candle, and we have a bullish candle, which is going to the upside. Okay, you can see that here there's another doji candle. Okay, here there's another doji candle, but why we didn't take our sales at this area? Because on the next candle it's a bullish candle, so it's not a bearish candle. We are not going to take any sales there. Okay, let's see. Yep, here we have one example of the evening star. So remember what I mentioned, we have a bullish candle, we have a doji candle, and for this bearish candle, the body has closed way more than this doji candle. We can take our sell positions. So it's quite simple and easy to digest. You just need to look at the chart every day, take your time to actually monitor and just practice. Okay, okay, so I'm going back to the 1 hour time frame. I'm going to find my area. Let's see. Where is it? Where is it? Okay. Okay, so this is the area, I presume. Yep, okay. So this is the area. Okay. So what I'm going to do now is I'm going to find the highest and the lowest. Okay. I can use multiple types of tools. For me, I'm using this tool, horizontal line. Of course, you can use the rectangle, which is drawing out zones and things and stuff like that. It's up to you. For me, I will click on this to find the highest point. Let's say it's here. Okay. This is the resistance for me for this point in time. Okay, where is my support? Let's say, for example, here. Let's be fair. Let's be very fair. Here. Okay. The reason why I don't want to mark this particular place is because here, if you zoom in a little bit closer, this area is more likely for price to actually give a very strong support. Because if you notice from this area, price has touched 1, 2, 3, 4. So this is a strong support area which we can use to actually mark as our support, because there are many touches. As long there's a many touches, we can use it for support. Okay, so this is the horizontal line drawn. Okay, for me, how I want to give my support and resistance more precise, I can actually, this is just a suggestion. You don't need to use this, but for me, I use this. Okay, you can go to the line chart, then you use the horizontal line again. For me, I will find areas where there is a very sharp point. What I mean by a very sharp point, let's say for example here, okay, this particular point, I know at the top I have marked my resistance already. So I know this is the resistance, and I can see that price actually pushed down here really strong. There's a strong movement there. Okay, so I'm just going to mark just above that particular horizontal line, sorry, just below that horizontal line and just above that particular sharp point. Okay, now for the bottom, the support, for me, I would say that there is very one strong support here. You can see that there is a V shape here. So even for the top, there's a V shape. As long that particular place is the support, and that has a very strong V shape which pushes price to the upside or the downside, we can mark it as a really strong support or a really strong resistance. Okay, so let me continue. Okay, now we can see that yes, even after I've marked this, you can see this area is a strong support and this area is a strong resistance. Okay, so if you want to add on more detail, you can do something like this. You can add the rectangle, and you can just edit something like this, so it can be easier for you to spot the support and resistance. So this is basically how you can mark support and resistance. To find the price, you can use this tool if you want. Just give me a sec. Yeah, price note. So you can note that, okay, this is the lowest and this is the highest. You can do something like this. This is support and resistance, and this is a way you can do your support and resistance. Okay, let's go to the next one. Okay, yeah, this is the another example that I've just shown you just now. This is on the line chart. I've given you the example just now, and then now we have trend lines. Okay, trend lines is really interesting. I'll just show you directly on the chart how you can use trend lines. I'm going to use this tool called the trend line, and let's say for example, just give me a sec. I'm going to zoom out and find a really strong trend line. Okay, I'm going to use this point here to here. Let's see, let's see. Yep. Okay, I'm just going to use this area. Okay, the reason why I wanted to take from the top to the bottom, it gives me a strong direction, and it just minimize, I would say, like sometimes when you look at the chart, right, when you draw a trend line too close to a certain price, and then you see that, oh, the price has actually broken through the trend line, I'm going to take a long position. But in fact, if you zoom out and you take the trend line much more wider, you can find more precision places for you to take your entries. So this is the reason why I wanted to do this. Okay. Okay, so I'm just going to explain a little bit more about trend line. Okay, trend line is basically something like this. So you can see here that price is moving to the downside, which is in the bearish movement. And I've drawn a trend line here to indicate that the current trend here for this portion, just this portion alone, is to the downside. Okay, what will be a good indicator for me if price goes to the upside or change to the bullish direction? Okay, I would see that price goes to here. Once price has did a strong movement to the upside, and you can notice here price has broken through our trend line. Okay, so I'm going to use this circle here, just to show you guys that this is where price broken through. Okay, so as you can see here, the price broken through here and went to the upside. Okay, so now this is a valid trend line. Okay, when it is not valid is when price has broken through it. Okay, so I'm just gonna mark let's see where's my text. Okay, so I'm just going to type in here for you, trend line down. Okay, so this is just something easy for you to reference later. Okay, so this is trend line down, or I would say the trend line which is going down. How do you find a trend line going to the up or the upside? Okay, I will show you how to do that as well. You can see that here. Okay, here is a good example. Okay, you just need to mark here to here. Okay. So as long as the thing, the candle is going to the upside and you mark a trend line like this, it is valid. So this is also a trend line, but it's going to the upside. Okay. So I'm going to mark this, I'm going to just mark this here for you guys. So you can see that this is what I mean by trend line up. Okay. Okay, so this is basically about trend line. Before I continue, I'm going to share with you guys a little bit more about this trend line later. Just give me a sec. Okay, so this is trend line, and you can see here in the picture, I have shown you that this is the resistance, this is the trend line down, this is the support, this is the trend line up. Okay, okay. So now, how do you do your trades based on chart analysis or things and stuff like that? This is just one example which you can use for trades. Of course, there are many other types of strategies or many types of analysis, chart patterns or things and stuff like that. I'm just going to use the trend line break and retest method as an example for you to take your positions, whether it be a long position or a short position. Okay, or I would say you take a buy position or you take a sell position. Okay, so this is the same chart as just now. Okay, so remember where we written down the trend line just now? It's trend line down, and then here we can see that that price is actually broken through this area. Okay, so if price has broken through this area, means that we can take a buy position or long position. Not all the time, but most of the time. Okay, so what happens is you can use this tool if you want. For long position, you can just click it here like this. Okay, and then for your stops, maybe if you want, you can put it here. And then for your reward, you can aim for the top, the highest. The reason why, if you look to the left, we can see that here used to be a very strong resistance. Strong support which became resistance. Okay, you can aim for that particular high, or if you want, you can just aim for this area here. Okay, you can aim for the nearest resistance, this area. I'm going to use the horizontal line just to show you. Okay. Okay. So you can see that you can take a long position here. Maybe let's see what did I do. Yeah, it's the same one. Okay, just nice. So this is a good ratio which you can use. This is a good tool which you can use to find good ratios for you to take a buy or take a sell, depending on what time frame you do. Depending on what time frame you want, and depending also what type of trader you are. Whether you are doing scalping, which is from 1 minute to 30 minutes, or either you're an intraday trader, which you are doing trades from up to 1 hour or maybe to 20 hours, depending on the intraday period that you choose, or if it reaches your take profit or your stop loss. The last type of trader is what we call a swing trader, where you're going to swing all the way, which means that, let's say, for example, if I'm going to take a buy here, I'm going to wait until the highest, higher than this. So I'm going to wait like maybe it can be 3 days, 7 days, 1 week, 1 month. It depends on how long your swing position will be. So it depends on what type of perspective you look at the chart and what type of trader you are. Okay, so you can use this strategy or use this concept for all your trades or all your styles of trades, because this particular method, it actually works for any type of trader. Okay, so I'm going to continue here. So if I'm going to take a long position or either a buy position for gold, okay, this will be my entry point. I'm going to just put here color. Okay, this will be my buy zone. Sorry, my buy entry. Okay, this is where I'm going to buy. Okay, this is where my stop loss is. Just give me a sec. I want to mark this down for you guys so you can know. Okay, and this one stop loss, and we have the last one, which is take profit. Okay, so we have three things that we will need to take note. One is our entry. Sorry. Oh, my bad. It's the opposite. Okay, just nice. Okay, cool. So if you're going to take a buy position, this will be our entry, this will be our stop loss, and this will be our exit. So we can also find out what is the price that we are going to exit at. 1846. Our stops, yeah, this is our stop here. Okay, so there's another tool which you can use to calculate how many pips you're going to risk and how many pips is your gain. Of course, here you can see the risk reward is 1.68, which is the risk to reward. But you can use this particular tool, which I normally use, or I use most of the time, which to determine how many pips is the movement. So this is what also I want to explain. What is the meaning of pips? Pips is basically counting from point A to point B. How much is the movement? How many minutes or how many days it took for you to reach. So I will give you an example here. Okay, let's just say from here, this bottom to this top, I'm going to use this tool called the info line. So I'm just going to take from the bottom here, which is the Friday, 17th of February, 2023 at 4 p.m. I'm just going to click and I'm going to pull up here to the highest. Okay, so this would be taking roughly around 22 bars, which around 3 days. Okay, so you can see here the distance. You don't need to worry about this distance. Okay, you just need to look at this 4 digits here. Okay, if you see the number 2828, which means 2,828 points. Okay, but in pips, it's 282 pips. Okay, so I'm just going to use this tool here to actually elaborate a bit more. Okay, so pips is equivalent to the movement from point A to point B. Okay, so let's say for example, if I'm going to use 1 cent, 10 cents, and $1, which is the one standard, which is what normally traders refer to the one standard, but you can call it the one lot or $1. Okay, so let's say for example here, just now we saw that it was 282 pips, right? Okay, so here I'm just gonna put there 282 pips or 282 2828 points. Okay, so if I'm using 1 cent to do the trade from point A to point B, I will get $28.20. Okay, and then if I'm using 10 cents, I will have $282.20. If I'm using the one lot or the one standard or $1, whatever you call it, as long as it is 1.00, you will get $2,828. So this is the difference for pips. Okay, I hope this particular tool and this explanation of pips can actually help you and to guide you on calculating point A to point B. This is also useful for this long position that we're going to take here. Okay, if I'm going to use the info line, I'm going to click for my entry. We need to find out first how much or how big our stop loss is. So let's say, for example, this particular trade, I'm going for a swing or intraday, either one. Okay, so my stops is going to be at the lowest support here, which would be 164 pips. Okay, that is my stop loss. And if my take profit is 226 pips. Okay, so my gains is more than my losses. Okay, so of course, ethically, or I would say logically, not many traders would take this position, but it depends. Like I said just now, it it is how you trade and how you use your proper risk and reward towards this particular trade. So let's say, for example, if the account size is around roughly $1,000, example, and you use proper risk management and proper risk to reward, this should be no issue for you. Why I say that? Okay, I'm going to give you an example. Let's say, for example, if you're going to use $1,000, okay? Okay, I'm going to give you an example. Let's say, for example, your account size is at $1,000. Okay, 1,000 USD. Okay, so I'm just going to put this here. Let's say you got 1,000 USD, and we can find out that the stop loss for us is around 100 and 137. That's weird. Oh, yeah, 163. Okay, 163 pips. So this would mean if I'm going to use 1 cent, it's only $16. If I'm going to use 10 cents, it's $163, which more or less is around 16% of our account if we go into loss. So let's say, for example, if we are going to take 10 cents, okay, let's say, for example, we are going to use, let me use this one. Just give me a sec. So let's say, for example, if we are going for 10 cents, okay, if our stop loss hits, we are hitting at 163 USD loss. Okay. Okay. This is our stop loss if you are using 10 cents. But if our gains, it's 226. Okay. So if you are using 10 cents, it's 226 USD profit. Okay, so this is a method which you can use to actually find out what is your risk and what is your reward. So you don't need to go into trades blindly, and you don't need to worry like, oh, what is the lot size I'm going to use? Or how many pips do I need to calculate? I'm so worried. Like, if I enter a trade now and it hits my stop loss and my account is blown, all my money is gone. No, that's not the case. That's not the case at all. This is the very simple concept, and it's very important that you need to take note that this is the proper risk and reward management system. Okay, so it's very simple. If you're going to take a buy position or a sell position, either one, okay, the first thing that you need to do, the SOP for you, is to find out your stop loss. Okay, you need to find out your stop loss, and are you willing to risk that money, and are you willing to lose that money. So even before you come into forex, you already have a mindset. Okay, like let's say, for example, I have $1,000, and this $1,000 is my extra money. I'm willing to risk it, but I'm going to use a proper money management system to actually achieve my goals. Okay, so this is one way you can do that. Okay, so if you notice that if our loss is at $163, it's more or less 17% for a loss for that account. You still have a lot of money left for you to do more trades. And most important of all, if you are looking for trades, you can find trades that will give you a 1-to-1 ratio, or more than that is even better. Like for this one, the loss is more than the gain. So it's really promising, or I would say it's a good trade for you to go into. Okay. So now that we know that if we are having $1,000 and we are taking a 10 cents on just one layer, of course you can do multiple layers. It's not wrong to do multiple layers and do 1 cent here, 1 cent, 1 cent, and so on. You can do that if you want. Just give me a sec. You can do like let's say you're buying here. You did 1 cent here, 1 cent here, 1 cent here. You can do that as well. This one is another trading method or a trading strategy. This I will cover in the next class on how you can use this method. Okay, the layering method. But this one I'm just using as an example of 10 cents at just one layer and calculating your risk to reward. And yeah, this is basically how you can find a good entry point, find a good exit point, and find a good place for you to stop loss. Because most important of all, especially in trading, especially forex, and especially gold per se, it's very important you find out how much you're willing to lose rather than just going in the trade and not going in your way and just feeling bad after it and thinking like, oh, I should have set my stop loss. Now it's like it's not going to go into my take profit and so many other things. Yeah. Okay, let's continue back to this video. So this is the risk to reward plus risk management. Okay. So that one was a buy position. This is a sell position. So same thing, vice versa. Okay. I found a trend line here going up. If you look on this video, there's a trend line I found here going up. I'll show you how I found that in the chart. Okay, here I just need to remove the long position. This one I just move it here. Okay, and then I'm just going to use the trend line. Okay, from here. Just give me a sec, yeah, guys. Yeah, somewhere around. Yep, somewhere around here. Took the break. Yep, correct. Somewhere around here. And oh yeah, this is one resistance over here. Yep, and this circle, I'm just going to move it here. Okay, this buy entry, I'm just going to remove it to not confuse you guys. Stop loss, I'm just going to remove. Okay, so now we have taken our long position, and while that position is going on, we have discovered that there is a uptrend or a trend line going up. Okay, so here I just want to copy this, just put it here. So this is also a trend line going up to the upside. Okay, so I'm just going to put it all the way up into here so you guys can see. So coming back to here, we saw that there was a resistance at the top and price made a new support here. The reason why I made a new support here, okay, if we look to the left, we can see that here there's a resistance. Wait, I'm just going to show you. This is a resistance. So just give me a sec here, guys. Okay. Okay. And here. Okay. So as you can see here, the price did became a resistance here one time, twice, and then this the third time. But this third time it has broken through, became support. It became support just for one time, then it broke through. So which means that now it has became a new resistance, and we can see that this particular price has broken through that support. Okay, so what happens when there is a breakout, or I would say the break of trend line, a similar concept or the similar movement here. There is a downtrend, and then there is a breakout. Then when price comes back to the trend line, or either during the breakout, you take your buys or take your long positions. Here we do the same. Okay, so I'm just going to remove this. Okay, so I'm just going to show you here since I already drew this. Okay, so here you're going to take your entry sell here. Then your stop loss is at 1858.53. Your entry level is at 1846.44. Okay, The reason why my take profit is at 1819.43, let me show you. Okay, so I'm just going to use the 2 again. So just now I used the long position, I'm going to use a short position. Okay, so we just need to make sure that get a good risk to reward. Okay, okay, so yeah, info line 113. Okay, this is a good risk to reward. Okay, so let me show you what I just did, guys. Okay, so basically there's a break of this trend line. I want to initiate a sell position or a short position. To be precise, this area. Okay, so my stops, I'm gonna put it at the top, and my take profit, I'm gonna put it here. Of course, you can take your profit until the bottom, which is the support. You can do that as well. The reason why I'm taking this area is because last time what happened was the price actually broke through. This became our new support. Okay, so that's the reason why I wanted to take the profit up until to here. You can do the take profit up until to here. There is no right, there is no wrong. Or you can do something like, let's say for example, if price is going in your way, let's say for example like this, price is going down, it hits, just give me a sec, just give me a sec. Okay, oops, my bad. Okay, so let's say for example, price already came down all the way here. Let's say this is your take profit. What you can do is you can set your break evens. Okay, so let's say for example, price it goes up and goes all the way down. You can still aim to the lower support. Okay, so that means let's say for example here you aim for your first take profit. Here is your take profit number 2. So let's say for example, if you open here, I'll take this example. You have 10 cents as your position size or your lot size. Maybe you split it into 2. So let's say for example, I'm going to just take this. Okay, 0.05, then 0.05. Okay, you can just split it into one aiming for the take profit one aiming for take profit 2. You can do that as well. For this one, I won't go into depth about layering. I'm just giving you the example. Okay, so yeah, you can just use 10 cents if you want. And even if you use 10 cents and you go for take profit 1, it's still quite a lot. It's not quite a lot, it's a lot actually. Okay, let me show you why I say that. Okay, first we need to find out what is our stop loss, our SOP. Find out our stop loss. Okay, our stop loss is at 11 to be exact. Wait. Okay, 119. Let me just count it as 120. Okay, so our stop loss is at 120, 120 pips. Okay, so which means that our losses will be 120 USD if we hit our stops. Okay, then what is our gains? Let's say for example, if you're aiming just for the take profit 1, which is around this area. Okay, you can see it's 257. Let me just lowball it at 250. Okay, so we have 0.10 with 250 pips, which is our profit of 250 US dollars. Okay, so this is a good risk to reward ratio. Okay, you can do this for many types of currencies, many types of pairs. This is the one I'm using as an example for gold. Okay, so this one, remember, I was mentioning just now that counting your stop loss is important. It is very important. And for the lot size, I've given you guys some clues, some tips on how you can use proper risk reward management. So vice versa again, if you're using $100 account, this should be lower. This definitely should not be 10 cents. You can use 1 cent if you want, or either 2 cents for lowering your risk. But this one I will cover on the next class on more in detailed layering method, money management when you're using a smaller size accounting and stuff like that. But this is also a very good example. Even with this, can give you the idea, can give you the kickstart on basics on how to take trades and things and stuff like that. Okay, so let's continue with the video. Okay, support and resistance. Okay, we have our long entry just now. We have a short entry or our sell position. And let me recap. Yes, let me recap. I don't want to leave you guys hanging or I just don't want any attack. Okay, so let's just recap. So we have our what is forex, or the basic about forex is basically currency pairs fighting against each other. Who is stronger at that point in time? Okay, so we have a lot of currency pairs. We have the Euro US dollar, USD JPY, Great Britain pound with the dollar, and even golds. Sorry, like metals, gold and silver. Okay, then we have a bull market which is going up, bear market which is going down. Okay, so in our next slide here, you can see bull market going up and then bear market going down. Okay, and remember what I told you guys, the simple idea is if a bull charges at you, it's going to use its horns and going to push you up in the sky. It's going up. If a bear, he wants to attack and just demolish you, he's going to use his paw, his nails to actually scratch you and push you down to the ground. That's a bear market. Okay, and another idea to remember is the magnet. Okay, so let's say for example, if the magnet is not strong, which is the last three letters at your pair, let's say for example gold. Okay, now the pair is gold versus dollar. Gold is the US dollar is the base currency. So if USD is weak, it cannot magnetize the chart will go up. But if USD is strong, the magnet is strong, it is the opposite direction. The price will go down. Okay. Then next in the chart, we have the candlestick chart. Like I mentioned to you just now, whatever you see on your chart is what we call candlestick chart. If you change it to the line chart, it will just show you lines. But the one that we need to pay attention to and give us more detail is the candlestick chart. Next, we have this one, the candlestick chart pattern. So this one, you like I mentioned just now, you just only need to remember this four. This four is just good enough for you guys to use already. Okay. Next is a candlestick pattern to change direction, which is the morning star pattern for buys, evening star for sells. And then this one is support and resistance, the highest and the lowest. And this is the line chart showing you the highest and the lowest. This is trend lines, trend line down, trend line up. This is the risk management plus risk to reward for buys. This is for the sells. And we have come to the end of the basic training. Okay, guys. Thank you very much again for your time. And I hope this particular session or this particular basic tutorial video was really good for you and it was really informative. Of course, you can always contact us on how to proceed further for the more trainings or things and stuff like that. And I will meet you in the next training. Thank you very much. Take care and see you at the top.